What's up, guys? Welcome to the channel. Today I wanted to do a video on margin trading, specifically what margin is, why you might use it, what it's going to cost to use it, what are the risks of using it, and basically a quick rundown on uh, what the benefits are of using margin and what the risks are mainly, and why I use it and why maybe you should too. So this video is going to be a little different than my previous ones. I think we're going to unlock this visual stuff over here so that you can see my margin position. We'll go to positions. You'll be able to see my buying power, my margin, the maintenance requirement. We're going to go over all of that. We're going to go over what the initial margin is and then maintenance requirement, what the difference are in the two, and I'll go ahead and explain what a margin call is in that conversation. And so without further ado, let's jump right into it. This is an exciting point of my account because we're getting close in the trading account to 100,000 at the top. That being said, we're also going to talk about in this video that this number doesn't mean that this is my equity. Since this is a margin account, I can't just cash out $100,000 out of this account. If you're interested in margin, please buckle up, follow along, and we're going to try to make this super informative, but also get through it as quick as we can so that I'm not boring you to death. So with that being said, here we go. Margin investing. All right, so first off, what is margin? Margin is borrowing money to invest, and you are going to pay an interest on that margin to borrow it, obviously, like any loan, and hopefully you're going to invest in something that's going to grow more than the percent of interest that you owe, and that's what is called the spread, and you are going to try to make money off of the spread. All right, so real quick, I want to talk about just a little bit about the differences between a cash account and a margin account. So a cash account, and for all purposes of this video, I'm using Robinhood Gold, because yes, you can use whatever platform you want, and they might differ slightly between platforms, but for ease of user interface, I like Robinhood. It's easy to get into, especially if you have a full-time job and you can use Robinhood on the side. The Robinhood app is extremely easy to use, easy to learn, plenty of information out there if you're a new or beginner. And with that being said, if you start using Robinhood and you go ahead and buy the gold membership, you can watch videos on that, get a lot of information on the app on what gold is and what the benefits are. But for the purpose of this video, basically gold gets you a slightly lower percentage on borrowing and a slightly higher percentage on interest earned on your cash. So the cash that you have in your account. So whenever I started Robinhood and started buying in the gold membership, it was actually like 4.5 to 5% on cash, which was pretty good. So the cash in your account is earning that much as compared to your bank account. But if you look at your percentages, they're going to be like 2%, maybe possibly 3%. At the time, Robinhood was giving 5%, so it's pretty close to a high yield. Currently, Robinhood is at 3.35%. So basically, it's important to know that cash is a position, so that if market is underperforming, 3% is pretty decent compared to not making anything off of that.
If you just average like the S&P 500 10% every year, and then your cash was earning 5%. So if it's topped out and you think the market's about to come down, yeah, your cash is a position because now your cash is over here earning 5% while the market is going in the negative. And then when you think it's getting pretty low, you can use that cash, buy back some stocks, and you've effectively skipped the downside and played both sides. So there's one way to use cash as a position. Um, so one thing I will say about having just a cash account, if you have not activated margin yet, you are capped at whatever your cash size is, obviously. So you have $20,000 in your account. That's all you can trade. That's your buying power is $20,000. Once you activate margin, it is going to it's the initial cost is 50%. So it's going to take your stock size, divide it in half. So say it's a $500 stock. If you have a $500 stock already in a cash account and then you activate margin, it is going to divide that in half. Now you have $250 of cash in that stock and $250 of borrowed. So it's 50-50. Now you have that other $250 to do whatever you want with. So, yes, you do want it to be in a stock that you believe in, that's going to do well, or that it's going to go up, or a bullish trend, or whatever. So, again, once you enable margin, you now have buying power that exceeds how much money you actually have. Um, Pretty much double. It's times two the amount is what you're gonna have. If you have 50K, now you can trade 100,000. So it's as simple as that. So now that we've gone over the difference a little bit between cash and a margin account, what does it cost to borrow the margin? So currently on Robinhood, the margin account is only 4.5%. So you're talking about a 4.5 compared to what are the rates on the market right now for a loan? 7%, 9%. I mean, the borrow rates to borrow money is extremely high if you get a loan or a mortgage from the bank or whatever else. So to be able to borrow money to invest at 4.5 to me sounds like an excellent deal. Also, I have, as a side note, rates can be a decent indicator for bullish or bearish market. Now, I wouldn't only go off of that. As you see in my videos, I teach using other indicators like relative strength index and the MACD. But just as a side note, rates were higher whenever the market was low during my buy signals because the bigger institutions don't really want you to be making money like they are, right? So they can afford it, so they don't mind the higher percentage rates. And where if you don't have as much money, you might see that higher percentage rate and say, "Oh, I don't want to borrow just yet." Then after the market recovered and now that it's high, they dropped the rates. So the rates are now, like I said, 4.5. I don't want to borrow right now because the market is back up. So I don't really. This makes it enticing to say, "Oh, I can afford to borrow now because the rates are so low." So that's kind of why I say you can sort of monitor the rates and be able to read that and sort of determine whether it's a good or bad market. So just because it's a good rate, don't get excited and just go buy. Look at the market first. Read the indicators. See if it makes sense. So that being said, at a 4.5%, so let's just say you have borrowed X amount of dollars at 4.5%, and then you go put it in a stock and it raises 5%. Well, it negates the cost of borrowing the stock, and you just gained 0.5% in profit. So I know that's not a lot, but let's put it in terms of. So let's say you borrow at 5% and you get 10% return on the stock. Okay, now you've paid off the costs. You've have a break even on the cost of borrowing the money, and then you've made 5% off of that. So that's, to me, that's excellent. And the biggest part about that is you made 5% off of money that's not even yours. You made 5% off of a doubled amount of money that you already have. So you worked hard, you saved up 20 grand, you borrowed another 20 grand and made 5% on the borrowed 20 grand. So that's why I think margin is a good thing. I mean, that's obvious. That's the reason I'm doing this video, so that gives you a better understanding of the pros to margin trading. I'll go over some of the cons here in a minute, but that's, I mean, there is some risk involved, but yeah, this is a good thing if you use it wisely. With a margin account, you are using your cash as collateral. So I've been using $20,000 as an example. Let's just say you have 20 grand in your account and you sign up for margin trading, and it gives you 20,000 more on buying power. So you have 20 grand, now you have 20 on buying power added to that. That's 40 grand. So if you have your $20,000, your original 20,000 bought into stocks 100%, then your buying power is going to say 20,000. You have the stocks at 20 grand, and then you have the buying power at 20 grand. So there's your 40. You're using that cash as collateral. So whatever is in your cash account is collateral for the borrowed funds. That being said, if the borrowed funds gets down too far, they will liquidate your cash account. They will liquidate some stocks to cover your margin. So with that being said, we're going to get into initial margin costs, maintenance costs to maintain that margin, and let's go ahead and talk about margin calls all within this conversation. So since it is using your cash as collateral, this is not an account that you will be pulling from. You just go ahead and plan on, if it's going to be a margin account, you're not going to be pulling money from it regularly. The cash has to stay there so that you can use it as collateral. So this is an account that is there to grow. It's an investment account. You don't need the money from it. I recommend having a separate high yield account for your emergency funds. So once you've established emergency funds to the side, if you need cash, you can pull from that account. Don't use your margin account for that account. You don't want to be in a bunch of margin and waiting for it to come up, and then you need money all of a sudden and have to pull from this account, because then you're putting yourself in a position where you're having to sell your stocks or your borrowed funds at a negative to be able to get that back and be able to pay off your margin owed or a margin call. So don't start doing this if you don't have that already established. That's all I got to say is establish your necessities and what you need to survive, and then mess with the margin. All right, so that being said, I'm going to put a pause on this because I am going to do sub notes of, like I said, initial margin, maintenance margin, margin cost. But I want to take a side note from that and just continue on that topic of establishing your other accounts first, and I just want to share what it looked like for me to get from just an investment account with cash to slowly developing it into a fully margin trading account. It wasn't just a one-step thing. I didn't just say, oh, let me click the button and apply for margin. It took a while. You want to do it little by little. You want to make sure that you can afford it. You want to make sure that it works. It's right for you. It makes sense for you. You want to make sure that you're not pulling money out of this account. And as that slowly transitions further and further, you can eventually be 100%. So, that being said, progression might look something like, for me, it was 80% of my stocks were bought in. I had 20% cash in this account. It was growing 5%. I felt like that was a good split, 80-20. My cash was growing 5%. My cash was a position that seemed to work for me for a while. Get started just slowly doing that. Don't just buy 100%. A couple months went by, and then I went to probably like 90-10, and so 10% of my account was cash. And then a couple months went by, and I went to 95-5. It's whenever I was kind of studying margin and realizing that it would make more sense to be more bought into the market instead of having this 5% at a cash position. I'm going to start going for the 7, 8, 10%, risk it in the market or use it in the market, and then be maybe 7% or 10%. So once you start reading the market and you start feeling confident that you're beating the market, you are limiting yourself to that 5% cash growth, which is now 3.35. So I would, when the interest on cash is as low as 3.35, I would definitely recommend switching to margin. But like I said, do it slowly. When it was 5%, I still decided, okay, I think I can beat that. So once I was confident enough with my trading that I can beat 5%, I slowly started dwindling out the cash position and putting it into stocks. When I was at 95%, 95 to 5, so I held cash in there for a while. I probably went an entire year of just having a small cash position. When I switched to gold, I calculated how much Robinhood Gold was costing, and then how much cash I needed to keep in my account to pay for the gold membership. It was kind of a silly thing to do, but to me at the time it made sense. So my calculation was $1,000 in my account at 5%. That's going to pay for the $50 membership. So I kept $1,000 cash position to the side because mentally it was paying for the gold membership. It didn't take, and I did that for a year, basically just to feel good about myself. But it didn't take long for me to realize that to keep $1,000 set aside just to pay off a $50 position is kind of ridiculous. And you can put that same $1,000 cash into a stock and it get better than 5%, or you can switch to margin at that point and then borrow more than that $1,000 and put it into a stock, and then you're making way more than $50. So it's kind of a silly thing to do, but it was a step along the way. So as an example, you use that final bit of cash that you're saving, and you decide that you don't need it anymore. You switch to a margin account, you use that cash on some stocks. As an example, you borrow $50,000. If you make 1% of that, you put it in anything and just wait 1%, which you could get that in a day. That's $500. So to wait around an entire year for $50 at 5%, when you could be getting 500 is like I said earlier, is ridiculous. But all right, so now that you have a visual of what that progression could look like, let's go ahead and talk about initial margin. So initial margin is the amount needed to initially buy a position. So let's say at this point you've gotten this far and you've made the switch to margin. So right here you've made the switch to margin. Now your cash is working as collateral. You're not going to borrow, or you're not going to have to withdraw any of those funds. Now you have what is called initial margin. This is the amount that is needed to buy the position. You won't really need to know a lot about this other than the fact that it is usually 50%. So initial margin is usually 50% of the stock price. So I've used it in a previous example. Let's say the stock price is $500, and now that you have a margin account, you want to go buy that stock. and now you get that stock at $250, and the other $250 of that is being borrowed. So you are borrowing half of that stock at a 4.5% rate. So there's lots of calculations that could go into that. You can take that as deep as you want to go. I prefer to look at it as simple as I possibly can. I don't really need to know that. I don't need to know how many of each stock that I own and how much is borrowed. Like, this is just for your information so that you know it, and then you just kind of move on with your trading. That's what initial margin is. The important one is maintenance margin. So maintenance margin is the amount of equity you need in your account to maintain the position. This is the part that you want to really be sure of. I'm going to show you on Robinhood right now where to find this. I'll even do some video on the app where you can quickly access buying power, maintenance margin, all those things. So this is one that you're going to want to monitor often. Make yourself a schedule, do it every month, do it weekly, I don't care. Just check your maintenance margin, make sure that you have a nice buffer. You don't want to get close to that, because then you're issued a margin call if you go below your maintenance margin. So you go below maintenance margin, that is what a margin call is. And let's take a break there, and I'm going to show you on Robinhood Legend and on the app where you can locate your buying power and maintenance margin if you haven't already done that. All right, so this is one screen that I found, and I'm going to show you probably 3 or 4 different screens that you can monitor your equity and your margin used. Okay, this one is a little bit harder to get to because if you're in Robinhood Legend, you can go to the right screen, click on your icon of your profile picture, and then scroll down to Robinhood Classic. This Robinhood Classic shortcut will take you over to the Classic website, basically just like your normal login. And if you click on this investing tab, it's going to look different for some reason. But if you click on account and go down to click investing, this is what it looks like. I like this view. It shows that I am 100%. Oh, I didn't know it did that. If you put your cursor on there, it shows you the amount and how many shares. So this circle is showing that I'm 100% invested, basically, with my stock position. This shows the equity of the account. Futures, if you're trading futures, currently I did just get into one, so that's probably the current one right now. It was $60, so now it's down to 53. But this is a working order, so you can kind of ignore that right now. Margin used. So I didn't know that either, but if you highlight your cursor, it shows your little orange section. If you highlight this orange section, it shows vice versa. So orange is the margin used. This is I'm currently at 10%. If you like numbers, you could most likely come up with a solid solution for how much percent, an exact target that you need to be in when the market is high, how much you can afford. I could include that in this video. Basically 10% bought in, $11,000. I'll just do it real quick. $11,000 times 0.05, that's $550 for the year to borrow that amount. So one way that you can do this real quick is how much ever you got here times 5% for the year, divide that by 360, that's $1.50 a day. So this is one quick way that you can see, okay, how much of this can I afford? Can you afford $1.50 a day? Can you afford that times 30 for the month? $45. This is $45 a month. So if you can afford, do that calculation real quick, and if you can afford $45 a month, then you can stay in 10% at all times. you only want to get in more than 10% whenever the market is lower and lower and you feel like buying in more and more. When it gets higher and higher, or say you don't want to afford $45 a month anymore, reset this number to like 5%. Only use 5% of your margin. And when I say afford, I mean it's going to be coming from within your account. You're not going to have to make external payments on this. All you have to do is monitor your account and make sure that you're making at least that 5% to pay itself off. If you're making that 5%, then you're breaking even. All right, so that's enough of this page. Now we're going to go over to back to just the regular Robinhood Legend, and we're going to scroll down and see our overview. I definitely like this tab, and I recommend having it if you don't already. You hit add widget and you hit account summary. This account summary tab is going to give you all of this. You don't have to set it up, it's just already saved. So here you can see your equity that doesn't subtract your amount borrowed. This is just how much you have. It's going to show you your buying power, options buying power, which I don't really mess with options anymore. I used to. I don't really find it as, I'm just not as good at it, and I don't find it as profitable as what I'm doing. So I've ventured away from options, and now I just do stocks and futures. It shows you your futures buying power, which is very important. This is how you're going to calculate a position size and calculate your risk when you're messing with futures. I'm going to make a video on that right after this one. So hit that subscribe button. Please stick around. I'm going to show you how I take this futures buying power, divide that by 2 so that whatever you lose, you'll be able to buy back, and use that as your risk assessment. I basically just told you the formula, but that's what I do to create my risk assessment size, and to use that for sizing your positions. So in order to know how many contracts you want to buy, you don't want to get overbought and risk too much. You don't want to be underbuying if you can afford a lot more. So you can use this number, futures buying power, to find out how many mini contracts can I afford. Crypto buying power is also there. We talked about the initial margin. Crypto is different from that. Crypto requires 100% buy-in. It's not 50% like stocks. It's 100% required. So that's why this is different. Anyway, this is a number that I look at often, the cash position. This cash right here shows you how much margin you've used. It shows you I'm in negative 11,000. That all that means is I'm borrowing 11,000. I can calculate 4.5% on this based on this right here. It's also going to show you down here in this margin tab. Used 11,000, same number. So this number right here is what you can calculate how much you're spending per day. I'm going to show you in the app here in a minute where it'll also tell you that, and it'll calculate that number for you, and it'll tell you $1.50 a day. I don't even need to do the calculation. So your margin available, I can remember my equity is 94, so available 95. It says 94 on online. It's close. Available 95. I'm only 10% bought in, so I'm a lot lower than, I have a lot more buying power here available for me whenever I see something that's really low. I can get into it now. Futures equity, futures margin held, a futures micro contract right now is 26.55. So that's why you see this right here. I bought one contract this morning, and I'm down. This is the amount that they're holding out of your margin to buy that contract, and the equity is how much it is up. I'm up $50 right now on it. Whenever I sell it, I will get that $50 in my pocket, and the futures margin will return to my account. So yes, this is costing me 4.5% of 26.55 for as long as I own the contract. But then you get to profit this. Okay, this tab also shows you day trades. So if you are the type of person that you're trying to buy a stock low and then sell it high that same day, you're gonna get flagged. One right here. You do that again on on a different stock or the same stock. It's gonna go 2, then 3. If this hits 3 of 3, it will flag you as a pattern day trader. But since I've learned to buy low and sell high on a longer time frame and be almost equally as profitable, I prefer to do it this way than doing the in your phone every hour, every 20 minutes trying to day trade. That's exhausting and it takes too much of your time. And this I can maintain and still live my life. So that's why I like the more spread out time frame. If you have a question on why, like, oh, what did I trade 3 times? Why am I getting flagged a pattern day trader? You can hit this question mark. It will take you over to your account and tell you about the pattern day trading rules right here. And since I don't have any, it's not showing anything. But if I had some day trades, if you say, what did I day trade? It will explain the trades right here. It will show you which trades that you were involved in and give you the proof. So there's a good resource for that. I think we pretty much went over everything here. Maintenance requirement is the last thing that I talked about in the outline. This 30,000 right here is what I have to maintain in this account. That's why I say this doesn't need to be something that you withdraw from. This is an account that stays there and invests and builds. $30,000 is the maintenance requirement for this account size. All of this for margin and trading only needs 30,000. So that's a third. This account could dip 60%, 66%, and I would still have a third of that. There's also a buffer visual pie chart on. If you go over to, let's see, I'll make sure there's no extremely personal information on here. If you're on the classic view, which looks the same as on the phone, and you hit buying power right here, it shows you the same information that's on your Robinhood Legend side tab. This is what I wanted to show you. Margin buffer, 69%. Explore your margin. You can hit that, and it's going to show you a nice visual. Here's some Robinhood Gold information. The first $1,000 that you borrow in margin is interest free. Okay, so then after that, your annual rate is 5%. Ooh, look, it shows me right here my daily interest is $1.88. So there's one spot that you can find it. I prefer on the app. Again, I'll show you here in a second. But this is your chart that shows you the green portfolio value, total margin required. So that sounds like your maintenance margin over here, 32,000. So you have a 69% buffer. All right, so I showed you here, I showed you there. I'm going to pull up my phone. I'll screen share that and show you on my phone where I like to check that daily. On top of keeping your positions right here on the sidebar, another thing that I like to do is on the futures tab, you also see that I have it here because for the same reason you will access, let's see, here it is. And I can scroll down and I can see futures buying power right here. So I can have this little window up on the side and quickly access my futures buying power to calculate a risk box. So also recommend putting your buying power over here. You also have your margin held down here. So it's good to have that here and on your positions tab. Anywhere that you're going to be needing to calculate your buying power, it's good to have that there. All right, so I think I gave a decent explanation of maintenance margin. You want to monitor that, make sure that you have enough to be paying that off percent wise. Maintenance margin is actually set by FINRA to 25%. Most of the time, your maintenance margin will be 25% of the size. So, $100,000 account needs 25,000 to maintain. Pretty simple math. So, if you have $100 stock, you need $25 to maintain that stock. And then that's not counting the interest that you're paying on that. So keep 25%, monitor your maintenance margin. I think that's self-explanatory. So real quick, so I pulled up the app, and you can click on buying power here, the same as I just showed you on the website. You can click buying power here. It's going to show you the same information, your futures, your pending orders, margin used, blah, blah, blah. Explore your margin. Here you go, 69%. So, I guess one thing that I am just now noticing is, since I'm at basically 70% here, on the Robinhood Classic, it said I was 10% bought in. So I'm calculated as 10%. What this has done is take your pending orders, negative 8,000, and your futures order that is not pending, this is actually current. It's taking all these negatives and also putting it into your margin. Now, you're not paying on the pending orders yet, but it's subtracted that out of your margin total so that you know, okay, I have these pending orders here about to take place. I can no longer afford to borrow more. It's doing that in your favor so that you can stay on the safe side. So, being that this should be around 20%, and my margin buffer is showing 70 instead of 80, it means that there's some things that I'm not quite accounting for, such as fees and maintenance requirement, things like that. But if you hit explore your margin, it's going to tell you a good this is a percentage that you are away from having a margin call. Margin call is when your account dips below the maintenance requirement, right? So your total margin requirement is this number right here. If your total value, portfolio value here, dips below this, so you basically need to be like, the only way that's going to happen is if you're 100% bought in, or 90%, not the only way, but the most likely is that you are way too bought in with margin. You're using all your margin when the market is up, and you're not being safe at all, and the market dips, and now you're below that number. They're going to issue a margin call, and they're going to ask you to deposit the difference, because you have to stay equal. You can't dip below what you're borrowing. It's a brokerage. They're lending you the money, and if you show that you are now down, they're going to want their money back. So that's what a margin call is. They want you to pay that back. If you don't pay that back, they will liquidate the stocks or what they have to of your account to make that number match back up. Once your margin buffer is matched back up and you meet your margin call, they'll leave you alone. But the point is to try to stay above that so that you don't ever see the margin call. You don't want to have to liquidate stocks when you don't want to. You don't want to be too bought in. So this means I'm 69% safe. And whenever the war was going on and I started buying stuff in, I was probably way down here, and I was only at like 30% buffer. Maybe 45. I think I was like 45% buffer. I still had a good buffer there, even whenever times were way down and everybody was buying in. So this is important to note, and Robinhood's good at having little info tabs like this to show you. It indicates how close you are to a margin call. So please, 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 if you're using margin, just tap on that little arrow right here on buying power. This is the easiest way to access it. You tap that, you scroll down, you hit explore your margin, and there you go. There's your buffer, a nice visual of how safe you are. You use this number for how bought in you are with your margin. It's going to show you when you scroll down your margin requirement per stock if you're interested in that. Again, you can nerd out over this stuff. I just choose to ignore it. I don't need to know too many details. I'm just focusing on the charts. You can view all of them here. Shows you that they're all 25% maintenance margin required. It shows you your annual rate. And here's what I was talking about earlier. It shows you your daily interest right here. You don't have to do the 5% of your total margin, divide that by 360. You can just hit that arrow, come right here. It tells you your daily interest. This is going to tell you whether you can afford it or not. Multiply that by 30 days or whatever you need to do to determine how much you can afford per month and use this as your calculation. It's that easy. View all rates is going to show you if you want to borrow more and more. If you're a millionaire and you want to borrow $1 million, if you have $250,000 and you want to borrow that, your rate is now 4.5%. Your rate gets lower and lower the more that you borrow, but you have to have that collateral to be able to put that up. So for me, it's 5%. That's pretty much it with margin buffer. That's the main thing I wanted to show you is the where you can locate all that right there, nice and easy. I'm trying to think of if there's another place. You can hit your account right here. All right, so yeah, you can go to account, hit your 3 bars on the top right, and it's going to show you your menu. If you're a Robinhood user, you're used to this already. You know where to go. You hit menu, and then you can hit investing, and that's going to take you to a same visual as you had on the Robinhood Classic. It's also going to show you this is where you enable futures trading. This is where you enable margin. If you're tired of using margin or whatever and you need that money, you can switch back to a cash account. I would read about that before you do it and make sure that you're, have sold your stocks at profits and not in the negative before you just do this. But you keep scrolling down, and this is the same area that it shows you your day trades and your margin, the same as on the classic account. So, okay, and so that is it for where you can find all that information. Margin call is when your account dips below the required maintenance requirement. So margin calls are important. I mean, I feel like every trader probably goes through this. Back when I was day trading and I was trying to maintain 25K and it would dip down and I was trying to use that same account and doing silly things like that. Yes, I was getting margin calls, and then I was getting my paycheck and putting that into that. I went through that phase of life. I think most traders probably do. They experience that. Then they are like, okay, now I really know what a margin call is, and then they develop a system to avoid it. This is me developing a system and sharing it with you so that you won't have to do the same thing. All right, so let's say that let's say a $500 stock has 25% maintenance margin, so that's $125. So you are required to maintain 125. If that stock drops, causing your overall equity to drop below 125, that's when you'll be issued a margin call. So just a little example for you, and it's really simple to think about in terms of one single stock. Say I just get on there and I buy a Tesla stock or whatever, and it drops below 125. Okay, and it's $500. I'm issued a margin call. It's a little bit more in depth to that in real life because you have a huge portfolio of all these different stocks. So something can drop over here, causing your overall equity to drop and get a lot closer to your maintenance requirement, even though you're looking at this stock over here and you're saying, oh, I'm good. So you have to think of it in terms of your entire portfolio maintenance requirement and your entire portfolio equity. You're not just looking at a single, even though this example is for a single stock, you're looking at the account as a whole. Typically, when you receive a margin call, I think you have a couple days, maybe 2 or 3 days, is what it used to be. I'm not sure. I haven't done the research. You have a given amount of time to deposit that money, and if you don't, then they will liquidate. So you do have a chance to pull that from another account and put into this one if you so choose to do it that way. So when you're margin trading, it's important to manage your risk appropriately. So you want a risk managed buffer to keep you on the safe side so that you can avoid the margin call. So some of the things that I do in order to manage my risk is setting stop losses when you're profiting. So when it's up in the green, you're setting losses either a break even, above break even, at a profit, somewhere in there. Set stop losses. That's going to avoid you from going far in the negative, and you won't have to deal with that. Number two is position sizing. I briefly mentioned it earlier in this video. I'll probably make a video on how I calculate my risk and size my positions, particularly in futures trading, is really important. Somewhat important in stocks, but you definitely want to do it when you're futures trading because of the amount of leverage that you're dealing with. Position sizing is something that's required in futures trading. You can kind of just see it as a visual in stocks because there's no multiplier. It's just the numbers that's right in front of you. But when you're dealing with multipliers times 3 or times 5, you're definitely going to want to calculate your risk and then use that to size your position accordingly. So position sizing is a must. Thirdly, diversification. Diversifying your portfolio, you've probably heard it 1,000 times. This will save your butt when you have, and that's why you see when I trade, you see my portfolio, you see like a list of stocks. The reason for that is not because I'm so unsure about which one's going to be moving, or I just want to be playing one stock and trying to get rich off of it real quick. If you do that, if you're fully bought into one stock and it goes down, there you go. You just blown your account. So you spread across the board. That way, when one stock, UPS, Visa here lately, AutoZone goes down for a while, and you're hurting off of it, the other ones are profiting. So you're balancing out. You're selling the other ones as a profit as you're buying the other ones at a bottom, and it's keeping your account balanced. Guess what's going to happen? Those ones that are doing extremely well will one day face challenges, and they're going to dive. The ones that are currently facing challenges will rise. Your account will balance again. Diversification will save you for balancing your account wisely, and it'll keep your maintenance requirement a lot easier to manage. Fourthly, monitoring your maintenance requirement. I've just showed you 3 or 4 different areas on Classic, on Legend, and on the app where you can monitor your maintenance requirement. It shows you your maintenance cost, your margin interest cost, $1.88 for me. It shows it to you in multiple locations, and I showed you 3 different areas that you can monitor your margin buffer. Use those tools and maintain your margin. You can't have a margin account and not pay attention to these things. These things right here is basically what I use to manage my risk. Lastly, I'm just going to give you a quick overall idea on margin investing as a whole. I can afford to borrow a bunch of money when the market has crashed because the odds of it climbing back up are pretty great. So I can borrow that margin when the market is low and aim for the skies whenever it gets high, and aim for setting stop losses and profiting off of that. Basically, you want to get whatever your amount you're borrowing, when it reaches like a top of a trend or a high relative strength index, or the MACD is shooting way up, you want to start reducing those positions, and you want to start getting out when the market is high. You don't want to be over leveraged on positions whenever a certain stock or the whole market is at a overbought in high condition. If you're bought in a lot of margin at that high condition and the market crashes, it's going to take you with it. So protect your profits, borrow more on the low market, reduce more on the high market. That's the name of the game. Anyway, guys, I hope that you found this video extremely informative. I hope that now that you have a good understanding of what margin is and how to use it wisely, and you can walk away from this video knowing how to manage your account, how to leverage and grow your money wisely. And yeah, I just hope that this works for you as it does me. So with that being said, thanks for watching. Please subscribe for more as I go over the market weekly and give you market updates. Please consider subscribing to the channel at DIY Self. Like the video. If you have any questions, please feel free to comment them below. I'll answer them to the best of my ability. Have a good day. We'll see you on the next one.